name is Mike. I'm an equity research analyst, and today I will be breaking down my process live with a company that I've been following for some time. The company is called Franklin Street Properties. The ticker symbol is FSP. It is a publicly traded REIT, and they own about, I believe, 11 different buildings throughout the Central America markets, including Denver, Minneapolis, and they own properties in the Texas marketplace. So today I just want to break down my process in terms of how I value these companies, and this is going to be heavily based on the book value and just an estimate on what I think the company is valued at, what the market is valuing the company, and to see if this is something that would be considered a buy or a sell. So full disclosure, this is not investment advice. This is just me sharing my process. I want to do a lot more videos like this just to just document my process so other people can see it. And if there's other feedback or suggestions that people would like to ask or offer, I'm open. I'm all ears. So yeah, so I'm gonna jump right into it. So um, I started an Excel sheet where I was able to pull up the square feet for each of um, the buildings in those markets. So I pulled it directly from their recent earnings. Let's see if I can just pull it up here to share with you guys. So yeah, they just recently released their earnings a couple weeks ago. So I was able to basically add up all the square feet for each market. So for Houston here, I just basically added up the 157, 156, 248, 629, and basically I got these numbers here. So yeah, as you can see, I basically just added up all the square feet, and I was able to get the total square feet for each market. So what I did next was I got the average occupancy for the total for the property, and they're actually selling off their whole entire portfolio. They have JLL and Bank of America. They're the essentially the broker for this deal. So what I did was when I went over to the JLL site, I was able to pull up the occupancy for each property. Um, I'm hoping that this is the most recent occupancy rate, because the ones that was listed here in their earnings report, I believe they said that it was reported on the last day of the quarter, and I believe JLL just recently listed this. I want to say a couple weeks ago, like early July, late July, if I'm not mistaken. So yeah, so I'm going off of the occupancy rate that is posted on JLL's listing um, site here. So yeah, so I was able to essentially just add up all the buildings and then divide them by the amount of buildings here. Um, so yeah, so that's how I was able to get the average occupancy for each of these markets here for the property that they own there. So next, estimated price to square feet. So what I did, I used Gemini to help me get just a general idea of what the what would a property, or what was a recent sell for properties with those occupancy rates. So um, basically here, I did this a couple days ago, but I just want to compile it here to show you guys. So what I did was I just had asked Gemini for each market what was the average price a square foot for office building in Dallas. So I was able to just kind of go off of what they shown here. So for the Dallas market, if it's a B or C class property, they're saying estimated anywhere between $60 to $130 per square foot, based off of the 56% occupancy rate for Dallas here. So basically, what I did to be super conservative, I took the bottom number. I know that Franklin Street does have some Class A properties in its portfolio, but I wanted this valuation that I'm gonna show you guys here to be as conservative as possible. I didn't want any, I don't want any hiccups or anything. And of course, you can adjust these numbers as you go, but just for the sake of showing you guys this process, I'm gonna use the most conservative numbers, and then from there we can kind of just adjust to see um, what would be more practical. So I guess since I have Dallas open, I'm going to start with, where is it, Dallas. I'm gonna use 60 as the bottom end number. Dallas, $60 per square feet. Um, all right, so the next one I did was Houston. They've got about 82% occupancy rate there. Um, Class A, Class B plus. So they have a higher occupancy rate. Um, say Class B would be 120, Class A, B plus would be 130. I'm gonna go with 120 there. I'm gonna go with 120. Houston. So we'll say 120. All right. So the next one I did was Denver at 53% occupancy rate. Um, I actually went to this portfolio in Denver. Denver is a beautiful, beautiful city. It's just it's a it's a graveyard down there. There's nothing there. I mean, they got the Denver Nuggets and Broncos. You know, they got um, Deion Sanders School, the Denver State. I forget which Denver college is there, but it's definitely a sports centered area. But it was no man's land down there. I'm hoping, God willing, some more people move down there. But as we're looking at these numbers, um, I'm gonna go with 60. 60. I went to 1999 Broadway Street, which you can see here. That one's sitting at 50%. Well, actually drops to 47.5, which is it's tough. It's tough. But all right, so we're gonna drop in. What was that? 60. Yeah, 60. Boom. And then lastly, Minneapolis. It's the Minneapolis market at 60% occupancy rate. Sheesh. So they're saying Class B or C ranges from 30 to $70. Um, I'm gonna do 35 because I think Price Water Cooper is a tenant there. All right, so we have total estimated valuation based off of these rough numbers. It's just a guesstimate. We're looking at all the buildings can go for three 317 317 million. Now the market cap of the company, if we pull it up here, this is the chart. It's just actually monitoring the chart, and unfortunately, it hit the 52-week low today, but it's up 2.25. So, I mean, hey, you take some and you win some. So I have the monthly chart up here, and it's just been falling off a cliff, just like since 2016. Actually, it's just been, yeah. So let's. I'm just gonna pull up the balance sheet really quickly here. All right, so let me see. Actually, I can pull it up here. Yep, yep. All right, boom. So I just want to look at how much debt that they have and subtract it from. All right, so quarterly, most recent, they have 280, call it $85 million worth of debt. The market cap is at $46 million. All right, so here's what I did in this tab here. So I'm gonna copy this, and I made another tab just to place my own numbers. I'll show that in just a second. Oop. So let's look at the numbers here. So if they were to sell everything for $317 million, they have 280, call it $85 million worth of debt. That will bring us to the net equity of 32 million. Mind you, the market cap is already at $46 million. So if that brings the book down to 32, then unfortunately at the price of 44 cents, you would be buying it at a 30% premium, which is pretty bad. Pretty bad. So here in this other tab, what I did was I ran my own numbers, and currently, right now, if they manage to sell the whole portfolio for at least $75 a square foot, that would bring the building's value to 340, we'll call it 346 million. So subtracted the debt, the 285, brings you to 61 million net. So we know that the company is worth 46 million, and if net equity is 61 million, you're looking at a margin of safety of about 33%, which in this case, dollar wise, is about 15 million. So yeah, if they can somehow sell the buildings at about 75 bucks a square feet, if you were to buy in right now, you would have about a margin of safety of about 33%. Now, I was on Seeking Alpha. Some investors are saying, "Hey, we need $1. We want $2, all that good stuff." Um, I would love to see $2, heck, even a buck. But realistically, again, I'm using Gemini to just kind of give me rough numbers on comps. So I'm using the most conservative numbers, and the most conservative numbers are not screaming margin of safety. In fact, it's screaming like you're probably gonna lose money. And again, that's just an estimate. It can very much be super conservative to the point where it's like, man, like you're too conservative. But like I said, if the conservative numbers are giving me a negative return on investment based off of what they can sell it for, um, that is kind of a red flag. Um, I am still a firm believer that there is some value here. I know that they just sold one of their recent buildings in Colorado for, I believe it was about $100 a square feet. They sold it to, I believe, like an insurance company or health insurance company, if I'm not mistaken. So again, if they can get those type of numbers, like 100 here, 80 here, maybe 60 here, and if the average come out to like 80, that'd be great. Like, I mean, like if we, all right, so let's say they managed to get let's say instead of 60 they managed to do 80 for Denver. Houston seems pretty the strongest one, so let's say they can get 145. uh, Dallas, let's say they for Dallas, let's say they can get like 70. In Minneapolis, let's say they can get 55. Now you talking. Now you talking. Now you're looking at $400 million worth of property, and with that 285 in debt net, you're taking away 118 million. So you're looking at a return of about 158%. So that sounds more appealing. You know, but I don't want to overpromise and underdeliver. I rather underpromise and meet or overdeliver. Um, so yeah, so that is like one part of my process when I'm looking at some of these companies, and this one's a little bit easier because you're looking at buildings, you're looking at real estate, so you can look at comps, you can look at You can do your own discounts and kind of figure out, um, price to square feet, whatnot. So, like I said, I want to do more videos like this. This is one out of many videos I'll be doing. Again, if there's any feedback that you guys have, please put in the comment section. I'll put all the links and all that good stuff in the description to my website, my Substack, and LinkedIn, and all that good stuff. But yeah, I want to do more videos like this. So if you guys have any recommendations on other companies, please let me know. I do a lot of breakdowns and write ups on real estate companies like REITs or real estate service type of companies. So if you guys have any recommendations in that niche, feel free to send it over. And yeah, I'll keep you guys posted on the next one. Talk to you guys later.